Hello traders and potential future traders, Patrick Maldonado here, cryptocurrency trader and market analyst at Alpha Chain Capital and creator of TCE Trading. So in today's episode, I will be talking more about the importance of risk management, since the reason most new traders blow their account is because they are not aware of their risk exposure per trade. I will also discuss essential related topics like the importance of your risk profile, stop losses and take profits, and risk reward ratio. Traders, please do not forget to give me a review and subscribe to the podcast via YouTube, Spotify, or iTunes. It is really appreciated. So let's talk about risk management, guys, and thank you for joining me in this podcast. Again, I love doing these ones just to talk to you about the importance of different parts of trading. Now, the question is here: why bothering with a risk management? Why would you think it's important to measure the risk and be aware of it when trading? Now, this is mainly just for you to reflect, but in reality, I'm pretty sure that you have heard that a lot of people lose a lot of money in trading, and similarly, maybe you have heard that few people can gain a lot from trading. Now, there is a good reason for that. Right? And the reason is because a lot of people, they don't care about risk management, they don't understand leverage, and they just put a position looking at the upside, looking at the potential profits. And this is a very, very common mistake when considering new traders, is that they will focus on the profits rather than focusing on the risk, rather than focusing on their potential losses. Now, in terms of risk management, no one likes to lose money, right? I have not met any person throughout my life that say, hey, I love to lose money. At the very least, not like in the sense of just burning it and just lose it like that. Maybe in terms of education or getting a lesson, maybe some people will agree. Even I do agree that sometimes if you lose money in trading, it might serve as a lesson if you can learn from it. A lot of people look at after the thrill of losing money. A lot of people go and gamble, they go to casinos and so on. But if you're listening to this podcast, you are for sure not one of those people, or at least I hope that you are not one of those people. In any case, what is risk management? It's basically the process that helps you minimize your losses and potentially maximizing your profits, right? So you want to be aware of the losses that you may have, and you want to be on top of it. You don't want to go commando without knowing anything, or just putting a position and say, hey, I hope I make a lot of money, and then you do calculations and you say, hey, yeah, if this works out, I'm gonna double my account, when in fact, if you double your account, chances are that you're gonna lose it if things go wrong. So the basic principle of risk management really is that it allows you to survive long enough so that you can eventually profit. And this is what I've seen, from my experience and from other traders, is that your main goal is to survive the market, or at least that's the first goal that you have. And that's what I say a lot of the students in TCE Trading is focus first on survivability. And that's why I always tell them, this kind of like saying, not in forex but in trading overall, is that 90% of the traders lose 90% of the money in the first 90 days of trading. I repeat myself over that, but the point is that if you can survive in the market for 90 days, you're doing something right. Then you can start focusing on potentially increasing your profits. But from the get-go, that's the least of your concerns. The major concern is to preserve your capital. Now, in terms of risk management, a key part of this is your risk profile. So what I mean by risk profile, well, not every trader is in the same situation, right? I'm sure you have seen a lot of videos of people saying, yeah, I double or triple my account with trading. Maybe they have a lot of money to invest, or maybe they have a lot that they can lose and still be okay. There's a lot of people that I've seen in YouTube videos being like, yeah, I turned this 5,000 into 100,000. Is that possible? Maybe yes, but maybe they have, a million in their account, so 5,000 is nothing, so they can basically gamble or being very aggressive in their trading to in order to move and convert those 5,000 into 100,000. That's totally possible, but for a lot of people, that's not gonna be the situation. They might not have that much money to begin with. So your financial position is going to be key when considering trading. Your employment. Are you a full-time job? Do you have a full-time job? Do you have a part-time job? Do you have time that you can actually invest? Maybe this will help you decide. And we have been talking about this before. If you want to go to and be a day trader, or if you want to be a swing trader. Now, savings as well is another big part. If you have enough savings, if you can put something into your trading account that's not really gonna affect you, okay, by all means try it, right? But if you are in a situation that you don't really have savings, you don't really have anything in those terms, it's you really need to take that into consideration. And more than anything, into your risk management, because even if you don't have them, you can potentially start learning if you are more risk averse, if you go with the right expectations. Now let's talk about riskability, and this comes to what I've already said about a lot of some people having a lot of money and some people having not that much money. Is that how much can you really afford to lose, right? What I would recommend traders and also my students, I always tell them, think about how much can you really afford to lose without really putting yourself in a precarious situation. So if, for instance, if for you losing 100 to $150 is not going to kill your finances, by all means try that in your account. Of course, have the right expectations that if you are doing this with correct risk management, don't expect your account to double or triple, right? Really focus on the percentage, because once that you are more confident, you can treat that account as potentially a savings account, put more money into it slowly but surely, start grinding and earning a little bit more. That's very important. It's called compounding, and we have already talked about in previous podcasts. Now, apart from your riskability, your priorities are a key thing to consider. Are you married? Do you have a family? Are you a university student? Maybe you can save up on beer and learn a new skill. Those are things, those are questions that are very important for trading, and that may help you in order to improve as a trader. Because if you have other responsibilities, if you have people who depend on you, maybe you want to be a little bit more risk averse. Maybe you don't want to put all your life savings into this or investing. You need to take a look at other stuff. And just summarizing, and this is something that I cover in my AB trading course, but this is just the basics. Of course, in my course, I really go in depth into all these concepts. I really go in depth into how you do this in practice. But, for the sake of you, my mission on helping traders become better, or at least bring more awareness on this industry with correct standards, let's talk a little bit about basic risk guidelines, right? So the same, I always tell my students that our standard is basically 1% per trade. That's kind of like the gold standard in trading. You don't want to risk more than 1% of your account, and that's great, because with 1%, you can make a lot, and if you lose, you still have 100 more shots, which is what's important. Your survivability is almost guaranteed if you use correct risk guidelines and you just risk 1% per trade. Now, you can be more risk averse. There's nothing wrong about it. Maybe if you are going to put more, bigger amount, maybe you're going to put, I don't know, 10,000, 100,000. If you are really into it, maybe you want to trade 0.5%, or even less, depending on the size of your account. That's completely valid. Now, on the opposite hand, you can also be more aggressive. There's nothing wrong, and I've told this to my students, because a lot of people like to be more aggressive, maybe have smaller accounts instead of having bigger accounts. It's all about how you feel about trading. So a lot of people trade with 2%, which is, for me, it's the personal maximum that I would recommend per trade. You can also do 5% or even more, but to be honest, that's kind of gambling. and if you have a big account like 10,000 or more, I mean, that's ridiculous, just risking 5%. If you risk 2%, still doable. Again, it's there's nothing that I can say that it's completely wrong or completely right, because it really depends on you. Maybe you are already a successful trader and you are like, okay, I'm gonna open 1,000 account, just a very aggressive one, and I want to trade 5% just to see how it goes, right? Just as a test, just as a challenge, and that's fair. Now let's talk about stop losses and take profits, because they're key in risk management. In basic terms, guys, stop loss is the price at which you will close a trade and take up a loss. That's pretty straightforward. And take profit, the same, is the price where you're gonna close a trade and take profit. Now, the important thing, and something that's kind of like a general standard, is that stop losses should be placed after key support / resistant areas, while take profits should be placed either before or within the key support and resistance areas. This is going to be very important, in terms of price action. But again, this is something that you really need to go more deeper. I covered this a lot in the course. In terms of risk reward ratio, that's another important kind of concept that you need to be aware of. Is what's the risk reward ratio? Well, basically it's the units of profit taken per unit risk. Now, we've talked about the standard risk, which is 1%. So if you have a setup where you're risking 1% of your account and you're getting 2-3%, then your risk reward ratio is going to be 2 or 3 depending on the outcome. Now, ideally, what you want is to have a low risk, high reward setup that will enable you to be profitable, even if you have a lower than 50% win-lose ratio or a win percentage, right? And this is something that I cover again more, but generally if you have a 1 to 2 risk reward, that's gonna make it so that your break-even percentage is about 33%. If you have 3 risk reward ratio, meaning one risk per 3 profit, you have a 25% break-even threshold. And if you went all the way to 1 to 5 risk reward, you would even have 17% of kind of break-even situation, which makes it very good in terms of, you don't really need to win every single trade to be profitable. You can, as long as you win more than that percentage and you keep your risk reward in those levels, you can be profitable in the long run. Again, we're not expecting you to win every single trade. That's just not practical. That's not how it works in reality. But if you can have a good enough risk reward ratio and good enough win percentage, you can make it so that you can profit in the long term. Now, the last thing that I want to talk about risk management is really kind of like the most important part, but also something I just gonna be covering very briefly, is calculating your position sizing. So this is important. Why? Because if you don't calculate it and you just enter the market and you say, hey, I'm gonna be profiting from this, and you don't are not aware of how much you're exposing, that's a recipe for disaster. Now, the best way, to be honest, it's very easy, and I also tell my students, if you go into TradingView, you have some position calculators in there in the what's called paper trading. It's kind of like a demo account, but you can literally just go to Google and type position calculator for X asset, for I don't know, Bitcoin USD, or for Euro USD, for FOREX, etc., and that will show you different sources with different calculators, where you can basically just input where you want to get in, which asset, etc., and that's gonna tell you, okay, if you risk this with this specific stop loss, then you're gonna have, I don't know, $50 of risk. So that's how basically you are gonna be measuring your position sizing, and you're gonna be covering this part of risk management, which is essential. One thing that I really say is that it's really important to try and make all your losses the same risk per trade. This is just to help your situation, to help your performance, to be able to calculate it and potentially forecast it in the future. In practice, it might be more difficult, and even more difficult if you're a day trader. If you are a swing trader, then it's very easy because you can really focus on this risk reward, or the way that they call it in trading is are multiples instead of your base currency. So you don't mind if you lose 50, 60, 70 bucks. You don't care about that. You care about the R multiples. If one R multiple is equivalent to $50, then you care if you lose 1, 2, 3, 4, 5 R multiples, because that's 1% per trade. So if you have 5 R multiples, that's 5% to the downside. Or the opposite hand, if you are gonna be getting 3 R multiples for a trade that you're winning, that's a risk reward of 3 to 1, then again, you're just gonna multiply it. But well, in any case, traders and listeners, I hope that you enjoyed this episode of the TCE Trading Podcast. Risk management is an important part of trading and one that must not be ignored. So before finishing the podcast, I just want to say that there's huge news for the AB trading course. I have enlisted my course on Udemy. So now you can go to Udemy and look for TCE Trading's AB trading course, and you will find it in there. This is part of my approach to make trading education a little bit more affordable for you guys. So alternatively, you can go to my webpage, tctrading.com, to find a link for the course. And guys, if you use the coupon code TCFriends without any space in the middle, you will get plus 70% off from your purchase. So it's a great opportunity to be more involved if you wanted to get into trading and to learn how to trade. This is the perfect moment. Thank you very much for listening, and I will see you in the next episode. Take care.